What's up, everybody? I'm Marcus.
And I'm Kayla.
And we are the father-daughter portion of the Rembert Property Group. And we are here with another episode. We're going to be reviewing two of our favorite topics, which are wine and real estate. So for today's wine, we're going to be reviewing what is called a Mosketto. So Kayla, do you want to do any give any additional details about Mosketto, or are we just going to jump in and taste it?
Well, I can tell you something that the bottle gives away. It's a delicate sweet pink, and it's made with refreshing Italian grapes. Mm-hmm. So let's give it a try.
All right, let's go. All right, so before we give our feedback, we're going to remind you guys of how we categorize the wines that we taste. So how do we judge them?
Whether you would rent it or own it. So renting it means that we're not committing to it. Probably wouldn't buy it again, or we would not buy it again. And then owning, it's a long-term investment. We want to keep it around.
Yep. All right, so do you want to go?
Yeah, so spoiler alert, I have had this wine before, and I like Mosketto. It's a nice everyday wine, so I'm going to own it. It's fun to me. It's like not it's at a good price point. It's not super expensive, and it is something you feel good about drinking on a weekday.
Mm. Yeah. And I am going to not only just rent this, it's a short-term rental. Like, I'm only going to drink this if I'm absolutely forced to. I tend to, lean more towards the reds. I do enjoy some whites, and there are very few Moscatos that I like. But this one is kind of like, for me, borderline. Like, no, go get a bottle of 7-Up or Sprite. So that's my feedback on today's wine.
Yikes. All right, so moving into the real estate topic, which I hope he is more passionate about than he is about this wine. What are we talking about today?
Everybody's favorite topic as of recent, especially in this year, which is interest rates. Before we go into it, just so you guys know, from a realtor's perspective, we're not just saying, oh, well, don't worry about interest rates. We get it. Interest rates have been very volatile. In fact, from the beginning of 2022 up until around the filming of this episode, rates have more than doubled. So we get why, buyers, maybe some sellers might be a little bit apprehensive about rates. However, we're just going to, come to provide some additional clarity and some facts so that if you are someone who's considering buying, whether it's to buy to own and live in a property or as an investor, give you a more well-rounded way of looking at things.
Yeah. So talk to them, Dad, if you will, about, you've been doing this for a while. Talk to them about historically how high interest rates are, because they were super, super low the last 2 years.
Right. Yeah. In fact, Kayla and I would tell our buyers over the last couple of years, hey, if you're even mildly considering getting into real estate, and by getting into real estate, meaning purchasing a property, you want to jump on it, because you're not going to see rates that low probably in this lifetime again. So historically, though, since rates have been tracked over the last 5 to 6 decades, if you look at the average, it's been around 7.1, somewhere in there percent, somewhere in that range. All right, so where we are today is probably right in line, maybe just below what the average is, give or take. In fact, you'll go to some periods of time, like I remember my grandparents telling me the first house they got, I think their interest rate was like 17%. So the first house that my wife and I got, Kayla's mom, we got our interest rate was in the 8s. And that was just because, that's what it was. I think, again, as I mentioned early on in the video, I think what's contributing to some of the fear is how volatile rates have been over a short period of time.
Mm-hmm. Absolutely. And I, in August, I went to Keller Williams' family reunion, and one thing. Like a can. Yes. One thing that Gary Keller talked about, who's the CEO of Keller Williams, said that rates were artificially low in order to stimulate the economy during COVID.
Yep.
So he was saying, people are like, oh my God, I want a 2.5% interest rate again. But that was done because we were in a global pandemic. If we ever have to go back to that low interest rates, it's not going to be it's not because something good is happening.
Yeah.
So to get that was luck of the draw. We would hopefully never see rates that low again. And it did cause kind of a frenzy in the market. It was tough for buyers.
Yeah.
When the interest rates got that low because it shot up demand. So if you know anyone who was purchasing a home in the last 2 years, it was kind of crazy.
Yeah. So one of the things that I've been telling some of our buyers recently is like, hey, think of all the things reasons why you either didn't buy in the previous market the last 2 years or were afraid of. Which is I heard buyers say I'm overpaying for real estate. And I don't want to pay out of my pocket because people were giving gap appraisal coverage, which means that if the home didn't appraise at the price you agreed to pay for it, you were committing to come out of your pocket with the difference. Then you were waiving your appraisal. Some people were waiving earnest money. Inspection. Yeah, I'm sorry, inspection. They were waiving inspection. So think of all of those things that buyers had to do in some instances to get into a home. But I think you don't pretty much have to do any of those now. All right. So with the interest rates, Kayla's going to talk to you guys about some strategies that you can use because given interest rates, like she said, we're probably at a rate now that is normal. However, we do understand that some of you still want to pay as low of interest rate as possible. So what's a strategy that they can use to accomplish that? Yeah,
so one of the strategies that I've seen people have the most success with is a seller buy down. So it's called a 2-1 buy down because what happens is that the seller can request that the seller pays a fee. And that fee covers the cost of you getting your mortgage rate down for the first year 2 points. So let's say today's rates were at 7%. You would only pay a 5% interest rate that first year. And then the second year, you'd pay a 6% interest rate, And that gives time for the rates to stop being as volatile, and then when they go down below that, when and if they went down below that 5% or 6%, you could then refinance before you were at the market rate. So that is a very successful strategy, and I don't want to say easy, but it is a great way to kind of make that payment more affordable for you and to be able to kind of deal with a lot of people it's the sticker shock of the interest rates, like we've said, because they've gone up so much, but it is the market correcting itself. So it's not horrible. However, in order to, like I said, make that payment more affordable and have a lower interest rate, that's a great hack.
Yeah.
Ian, you want to speak to that a little bit?
Yeah, well, actually, one additional thing that go into that, it also protects sellers' value too. Because let's say, you're selling your home for $600,000 and, instead of dropping your price to $550,000, maybe, your agent, and this is a strategy we've employed with a couple of our sellers, and maybe not to this degree, however, just depends on the price point. Maybe now we market your home, say, hey, we're going to offer the buyer a seller buy down, which, as Kayla mentioned earlier, which is key because only the seller can pay this fee on behalf of the buyer to lower their interest rate. Otherwise, the buyer could use it for anything. So it has to go towards buying down that interest rate. So now, instead of adjusting your price by $50,000 from $600 to $550, maybe we offer the buyer a $25,000 seller buy down credit. And now they buy their rate down. They get a lower payment. As a seller, you don't have to reduce your price quite as significantly, so your bottom line doesn't take a hit. And by the way, the property values still maintain a very strong level. So could be a win-win all the way around. You want to, but this is one of those instances where, as Kayla mentioned, it's a hack. The reason it's a hack is because not all lenders and realtors are using all the tools in their toolbox. So this is where you want to make sure you're working with a great team, especially whether you're a buyer or a seller in this case.
Yep, absolutely. And then another hack or way to kind of get around these higher interest rates is new construction. So a lot of builders now, to be competitive, because again demand has shifted, they are offering lower than market interest rates. So D.R. Horton is a perfect example. In the Chicagoland area, they are actually, as of last week, so mid-October, they are offering a 4.99% interest rate and then covering $7,500 in closing costs. And that's not something, you're not buying it down with points. They're just offering that instead of greatly reducing the price of his home. And price of the homes, like my dad said, just to, you know, maintain the value of the homes, are just giving you that lower interest rate. And then that's not, it's not an ARM. It's going to be a 4.99 interest rate for the life of the loan. So that is a really great option because it significantly reduces your payment, and it helps, especially with a new home, it helps you get in there and start creating some wealth through real estate.
Yep, for sure. So with that, it brings us to the end of the episode. I want to make sure that remind everybody to like and subscribe. And feel free to comment with any recommendations, whether it's wine or the real estate topics you'd like us to cover. And until next time, remember, life is a gift from God.
Style is how you live it.
Cheers.